Thank you, Jerry, and thank you, Syed. And good afternoon, everyone. It's my pleasure to be here. This is my first time here in Canyon, and it really looks pretty, although it's pretty flat when I landed here. I thought College Station was flat enough, but I think this is really flat. It's really interesting times for us as far as international business is concerned. What I propose to do today, make a presentation of about 20 minutes, go over what emerging markets are and give you a feel for emerging markets, the characteristics of emerging markets, and also the recent economic reforms which have been implemented or being implemented in these emerging markets. And finally, for people in business, to give you an idea of the sectoral opportunities in emerging markets. And if there's any questions, I'll make it pretty informal, so if you have any questions as I go, maybe this is because of my sort of background, I guess, please interrupt if you can't understand or can't hear me. First, what are emerging markets? Well, emerging markets are basically economies that are moving to the free market system. Economies that were in the past either following command economic systems like the Soviet Union, Eastern Europe, or highly socialist economic systems. All of these economies that are moving to the free market system are called emerging markets. And if you look at the political side too, you'll find that most of these emerging markets are moving towards democratic political systems, although there are a few which still continue to practice communism, especially in China. Having said that, let me give you an idea of who these emerging markets are. And I hope you could see this. I don't know whether it's clear or not. But there are different definitions for emerging markets, and I have chosen the definition which is used by the U.S. Department of Commerce. The U.S. Department of Commerce in Washington, D.C. did a major study last year to identify, at the request of President Clinton, to identify markets for American producers or American manufacturers. And so they looked at the emerging markets for the first time and identified these groups of countries as emerging markets. One way to look at emerging markets is to look at the GDP, that is the output of goods and services in an economy, and also look at the population, because these things give, from a marketing standpoint, the potential for U.S. goods, services, and investment. So if you look at the first group, of course I put the United States on top to give you an indication of the size of our economy in terms of GDP, $6 trillion. And our population approximately 261 million, and our GDP per capita, divide one by the other, is approximately 23,000 US dollars. And our exports to the world is about 502 billion. This was 1994 figures. And our exports of services, that is like airline services, shipping, banking, consulting, all those kind of services, was $195 billion. So it's really huge, and of course you all know that the U.S. economy is the largest economy in the world. Second is Japan. Now when you look at the emerging markets, in East Asia, the countries are China with a GDP of $508 billion and a population of almost 1.2 billion, and you have a GDP per capita of 425. So the China market is huge in terms of population, and GDP is not too bad, but in terms of per capita, it's 425. And that's very important because per capita income gives you an idea of what the Chinese can purchase, how much they could purchase. In terms of population, it's huge, but in terms of purchasing power, it's not all that great. So it depends. When you think of marketing to a country like China, you've got to figure out what exactly you're trying to market. And U.S. exports to China was only about $9 billion. That's 9.287 billion. Next is Hong Kong, the most free market, the I would say the most free market system in the world is in Hong Kong. Hong Kong's market, economy is more free than even the U.S. economy. Okay? The market system there really operates. And a population of 6 million, and you have a per capita income of approximately $22,000 US dollars. And their imports, you can see Hong Kong's imports from the United States is 11 billion. It's much greater than what China imports from us. Okay? So Hong Kong does import a lot from the United States. Then we have Taiwan and South Korea. Okay? So these are the countries of East Asia which are so-called emerging markets. And then we move to the ASEAN countries. ASEAN stands for the Association of Southeast Asian Nations. And it comprises basically of 6 countries. I've omitted one, which is Brunei. Brunei is a tiny area within, it's surrounded by Malaysia, has a population of 200,000 and a per capita income of 26,000 US dollars. It's an economy based on oil. The largest employer is Shell. And it's not a diversified economy, and really it's not an emerging market. It's a small market, but part of the ASEAN group. So I've deleted that. But the big markets out there in the ASEAN group is obviously Indonesia. Indonesia has a population of 175 million, and population of 192 million, and GDP of 175. It's a country of 13,000, it has 13,000 islands. Depending upon the tide, you might have more. Okay? So if you want to own an island, go to Indonesia. It's very rich in natural resources, gold, oil, gas, you name it, they have it. And tremendous potential. Malaysia, again, a dynamic economy, a relatively small population, but a lot of resources. Philippines, of course. Singapore, a very interesting country. Only resources that Singapore has is human resources, but it's a completely or totally managed economy. Managed, but still at the same time, we have market forces operating, tremendous incentives offered to foreign investment. And so it's a very dynamic economy. I don't know how many of you have been to Singapore, but you must have heard about Singapore because of the caning incident, but there's more to Singapore than caning, okay? It's a very dynamic economy. There are certain limitations I see over in the horizon, but Singapore's per capita income is about the same as ours in the United States. But it's a small island economy. Thailand, again, a very dynamic country. So tremendous potential in terms of what they could purchase from us. In South Asia, India, country with GDP of 278 and a population of close to 1 billion. So tremendous competition between India and China, you can see that. In Africa, the emerging market is South Africa. South Africa's GDP out of total Africa's GDP is about 45%. So it's really dominant. So South Africa is really a dominant economy in Africa. And to an extent, it's the engine of growth for sub-Saharan Africa. In Europe, Poland and Turkey, we are talking about Eastern Europe. Maybe you could include, others would include Hungary, for example, which could be included as an emerging market. But there again, the same holds. Latin America, the 3 major emerging markets are Argentina, Brazil, and Mexico. And all of us are very familiar with Mexico. And as Syed mentioned earlier, sometimes these emerging markets submerge, but that is because of some policies which are not properly followed through. That'll be some other time. If you want me to come next time to talk about Mexico, I can talk to you for hours on Mexico. So these are the big emerging markets as defined by the U.S. Department of Commerce. Now next, what I'd like to do is to go over some of the common characteristics of the emerging markets. Okay, what are the common characteristics? All these economies, as I mentioned earlier, have taken market-oriented reforms. So that's one thing common. That is, they have given up the command economic systems. They found that it has failed, and so they're moving towards free market systems. So that is a sort of a common theme among all the emerging markets. And their economies have been growing very dynamically. There's so much dynamism in these economies. For example, China, mainland China, has been growing at a rate of 9% a year over the past 8 years. Unbelievable, 9%. And Singapore at an average of 8% a year. So you have some real dynamic economies there. Occasionally, they are unstable. The unstable ones, unfortunately, are in Latin America. A good example is Mexico, but another example is Brazil. Brazil has tremendous potential. However, each time they take the right steps, they go 3-4 steps forward, and then they fall backward. And that has created some problems as far as Brazil is concerned. So that's another thing which we need to watch out for. Many have important state sectors. During the process of moving towards the free market system, there's a lot of privatization taking place simultaneously. That is, state enterprises are being sold to private entrepreneurs. Okay? But still, in many of these countries in the emerging markets, the state sector plays a dominant role, especially in infrastructure. Demand for foreign capital and technology is high. Obviously, as these countries are trying to develop and grow much more rapidly, they want more foreign capital as well as foreign technology. And here is an area which the US and the West could help in their economic development. At the same time, we can help ourselves in terms of higher rate of return on investment. These countries also have large populations and with massive demand for infrastructure and consumer goods. Okay? That's why you find Pepsi and Coca-Cola in China, India, and all the other countries. Okay? So there's tremendous market both for consumer goods as well as for infrastructure. I think later when Jimmy talks, he'll talk about consumer goods or some of the industrial products which he's selling, which really fits into this particular pattern. Some of the drawbacks in the emerging markets is they often lack respect for intellectual property rights, and that's a big problem. The US economy is more a service economy. That is, if you remember the stages of economic development, countries go through basically 3 stages at least. One is agriculture, and then you move to manufacturing, and third phase is services and technology. So we are in the third phase, and that's where US has a comparative advantage. And some countries, like China, do not fully appreciate the importance and value of intellectual property rights, and that's something we always have friction with China. So they do not respect the intellectual property rights, so as far as investment is concerned, we've got to be careful about that. Yes, please.
Well, I understand that China has established a patent department, I'll call it, office. I don't know how much yet they're honoring our laws and we're honoring theirs, but I'm curious to know, we know what we can do about infringement on intellectual property in the States, but I'm curious to know what we can do in the rest of the world.
Well, it has to be worked through the WTO, that is the World Trade Organization, which is a follow-up of GATT. And that is the organization which would, and China hasn't yet joined GATT, and this is one of the things which the US is pushing for. Unless China respects US, or anybody's intellectual property, you cannot enter GATT. Okay, that's one of the things which is being discussed. And
did you just say WIPO? WIPO?
WTO, that is World Trade Organization.
Okay.
Yeah, but that's an important point because when you have a comparative advantage in a particular sector, and if you're not able to get transfer technology and get paid for it, I think there's a big problem. They do not have smooth functioning capital markets, some of them. The capital markets sometimes boom and then suddenly fall. That is partly because their capital markets are not as sophisticated as ours, so they do not have the disclosure requirements. The accounting systems are different. So you find this ripple effect, and also the monetary policy is an important factor. And some of these emerging markets do not have the institutions in place, like the SEC, which we have, an equivalent to SEC. So the regulatory bodies are not in place or have just been placed there, and they haven't yet implemented the policies fully. So you have some of these kind of problems in the emerging markets. The nature and competition of the regulatory environment is quite different. Again, just following up on what I said earlier, because the institutions, whenever you have a change, when countries are in transition, moving from command economic systems to the free market system, along with that you should have appropriate institutions, both regulatory institutions and others, that will allow for transition to the market system. And they are not yet in place or slowly being implemented. And next, since they are not mature markets like Western Europe or US, Japan, etc., these markets have ups and downs, and so a proper analysis has to be taken. Anybody who's interested in emerging markets should analyze these countries carefully and look at them from the standpoint of medium to long-term investment, and not as a place for short-term investments. If you're looking at emerging markets for the short term, I think you'll be sadly surprised. It's not the place to make a quick buck, okay? Unless you try to use the stock market. You could, if you're a good analyst. And the last item, as far as these emerging markets is concerned, is they trade among themselves a lot. So they do not quite totally depend upon the West. They do trade among themselves, like the ASEAN group of countries, or China, the greater China, Hong Kong, and Taiwan, or South Asia. So they have diversified themselves, and therefore, that's another interesting characteristic one should look at, because when you're trying to penetrate this market, you should be aware of that. Next, let me show you transparency, which indicates what are some of the economic reforms that have been implemented or is being implemented in these countries. Again, here we are talking about the movement towards the free market system. Now you have India, for example, has eased foreign investment restrictions, lowered income taxes, reduced tariffs, made currency convertible. Currency convertibility. In the past, you couldn't just convert local currency to foreign currency. Okay? Now you could in the current account. I don't know if you're familiar with currency payments, but you could. So the Indian rupee is convertible in the current account, but not in the capital account. Capital accounts, in the sense, let me give you an example. So if you're an Indian citizen and you had some savings and you wanted to invest in IBM shares in the New York Stock Exchange, you can't do that. That is capital outflow, and it's capital account. Whereas current account is if an Indian company or a multinational in India wants to import equipment, they could do that. If they need dollars, they can take the rupees and convert it. So that's convertibility. Now Brazil has eliminated most tariffs. The tariff levels have come down drastically, okay? And there's been a lot of deregulation, privatization going on. Now Poland has implemented certain policies. Poland is doing relatively well and is growing quite rapidly when you compare it with other Eastern European countries. South Africa, of course, it's a newcomer, but there is going to be a lot of change, and I think under Mandela, I think things look good, and the investment to South Africa is going to increase over time. And as I mentioned earlier, South Africa's GDP is 45% of whole of Africa, so it's a big market. Turkey has been liberalizing for quite some time. Argentina, because the Argentine peso is pegged to the US dollar 1-to-1, they have a system of exchange rate, and they are also liberalizing their economies. Mexico, I don't have to mention because you know too much about Mexico. There's tremendous amount of liberalization, although the recent issue deals more with monetary policy and exchange rate systems in Mexico, which has created the peso crisis. South Korea has performed extremely well. Syed and I were in Korea about 10 days ago. We attended a conference there, made a presentation on chaebols, that is the conglomerates, the South Korean conglomerates, they are done extremely well. And times are changing, and so will the chaebols. Okay, so things are going to change. And the new thing in South Korea right now is the scandal you must have heard of about the bribery of the former prime minister, but that's something else. Then if you look at the China bloc, there's China, Hong Kong, and Taiwan. Hong Kong has been the freest market. Next to that would be Taiwan. And China, of course, has conducted a lot of liberalization since 1978. Brunei, the small country which I mentioned earlier, Malaysia, Singapore. So all these countries, when you look at this, you see that there's tremendous reforms taking place. And some of these policies are non-reversible. That means you've taken certain steps forward and you cannot go backward. And when you have policy reforms, especially when they're correct policies, which are irreversible, then you can more or less say that the economic fundamentals of these countries look good. And that's why, despite all the problems which we see nowadays in Mexico, the economic fundamentals of Mexico are strong. And the policies, some of the institutions and policies which are in place in Mexico, make Mexico look very solid compared to the rest of Latin America. Okay? Let me show you the last overhead here, which talks about the sectoral opportunities for American businesses. Okay, what are the areas where U.S. businesses could penetrate in these markets? Okay. Information technology, including telecommunications, computer hardware, and software. One of the problems of these emerging markets is they did not invest adequately in infrastructure in the past. So suddenly, when they started liberalizing these economies and moving towards market systems, they're finding tremendous amount of bottlenecks in transportation, in power. If you go to the Philippines, practically every day you have power cut. The power is shut off for a half hour, 1 hour, because the demand is so much and the supply is just not there. Transportation, of course, you can look at the roads, how clogged they are, and the potholes and things like that. There's tremendous burden there. You can look at telephone systems. Again, the demand for telephone services is so great, but the supply is not there. Okay. So every aspect of infrastructure which we take for granted here in the United States is badly missing or in great demand, or the supply hasn't kept up with demand. So there's an estimate, a World Bank estimate, that approximately all these emerging markets require about $500 billion of investment in infrastructure over the next 10 years. 500 billion. That's a lot of investment. And that means tremendous opportunities for companies, especially a number of U.S. companies. I don't know if you've been following in the energy sector, companies like Ensurge, Enron Corporation. Enron Corporation is looking overseas. They feel that the market is overseas. They have a huge project, they're fighting for a project in India, in China. That's where the action is. So emerging markets, that's where some of the major infrastructure projects are going to be. Environmental technology. If you go to developing countries, you'll notice the quality of air, water, everything is relatively bad. They do not have proper treatment systems, and investment needs to be made there. And they do not have the technology. So again, there is opportunities for American business. Energy, I mentioned that, electric power. Healthcare, again, you're talking about pharmaceuticals. Given the size of the population in these countries, there's going to be tremendous demand for pharmaceuticals, biotechnology, and other things. Transportation, I mentioned earlier. Then financial services. Many of these countries, the banking systems are behind times, and they're state-controlled, so they are being privatized. So there, again, is a role for American banks to get involved. And that's happening. Banking, insurance, and this securities business. And consulting is a very important area. I mentioned about services as far as the U.S. is concerned. The service industry we are talking about consulting, providing consulting services, various types of consulting services, engineering consulting, management consulting. whatever, everything there's demand for that. Finally, advanced materials in the chemical industry and industrial machinery, earth-moving equipment. So, it's, all these things are there. And of course, agriculture, one thing which I left out here is agriculture, both in terms of imports of agricultural products from the United States, as well as technology, agricultural technology to be transferred to these developing countries so that they can improve the yield per acre of whatever product they are involved in. With this, let me wind up because and let Jimmy make his presentation, and then after that, if you have any questions, I'll try to answer. Thank you.